we have been talking about secondary markets coming back. I know this because people will email me and say, "Hey, would you like to add to your Thumbtack, your Calm,
Hmm.
et cetera, position? Would you like to sell some of those positions?" So I am seeing increased activities from this very weird gray market, or it's kind of like boiler rooms of people who want to charge you 5 or 10% to buy secondary in SpaceX, whatever is hot, Anduril, Stripe, or, and then charge you 5% for selling it. So it's a little bit of a underground, a boiler room, a back
Really?
channel.
Yeah, it feels like
Yeah, because there are people in it who are above board and are known, and then there are people who are not. So I get a little nervous sometimes when I get these weird emails if I'm being fished or whatever.
oh, wow, so
Mhm.
there's like a little Wolf of Wall Street, like they're kinda bending the rules a little?
I have heard stories from founders that people will they don't have the shares. They'll say, "Hey, do you want to buy some Anduril? I
Wow.
don't have the shares.
Mhm.
Would you
Oh.
pay this?" Then they set up an SPV or something. They collect your money. Then they go find the shares. They've charged you
Wow.
over. And yeah, so I don't know if any of that's true,
Mm.
but that's the back channel, is that there are people claiming they have access to shares. Maybe they're buying shares in another SPV, and the markups and the circular nature of this is unregulated.
Man, this would be a good movie. Somebody
It
should
could
write
be.
this.
There we go. Okay,
It's
there it
another
is.
boiler room, yeah.
It's a kind of another boiler room in and of
Yeah.
itself. Yeah. All right. So take us through what we've learned here. Yeah.
All right. So a couple data points to back up what Jason just said. First of all, from Industry Ventures, this is a chart of global venture capital secondary broken into two categories. If you're watching the video, the darker bars are companies selling shares on their own, and then the lighter bars is venture capitalists selling parts of their holdings. Jason, as you can
So
see, this
direct secondaries are from the company to new investors. That's the bottom dark green and dark gold.
Mhm.
On top of that are LP interests in those funds. LP interests, as in the venture capitalists like myself, and you want to sell them. So two groups of people who are shareholder holders in the company itself, their employees, and then the LPs who have bought an interest in it. I got it. Okay. And this has been
and
going up and to the right over
up and
time.
to the right. And so just to pick a data point, there were $16 billion worth of LP secondaries back in 2015, and Industry Ventures estimates that it's going to be 48 billion this year, up from 45 billion. So quite a lot of total volume, Jason. What also matters for people
It's
tracking
tripled in 10 years. LPs selling their interest in a venture fund. Just so you know, the firm that's doing this, Industry Ventures, buys the LP interest from funds like mine. So if there was an LP in my fund who was in the first fund when it hits 10, 11, 12 years, and they're like, you know what, believe in JCal, but we need liquidity,
Mhm,
Industry Ventures could step in and say, hey, we'll buy that interest from you. Got it.
mhm. And one thing that I saw from a Jeffries report is that the discount that people are forced
Mhm.
to take when they sell their shares has narrowed a little bit on the venture side of things. If you're watching the video again, it's the dark line here that we need to track. Essentially, last
What, just say the number for people who are listening. So the bottom chart is at 75% right now.
Mhm.
That is venture growth is at 75%, which would be a 75% discount or a 25% discount.
25% discount,
Got it.
and there was a 32% discount back in 2022 and 2023. So basically, the way that I read this, Jason, is that VCs who are selling some of their holdings in a non-traditional exit or IPO are now getting a better price for those shares than they did in the last couple of years, which I think would encourage more share sales on the secondary markets, which backs up the first chart that we looked at.
Got it. And the average across all asset classes is 89%, and leading the pack at 94%. That lighter blue line is the buyout market.
Mhm.
So when people buy out a company, which would be like private equity, if I'm reading this correctly, when you buy out an asset, I think they're assuming that that private equity firm really ground down the buyout. Therefore, it's a more disciplined industry when it comes into valuations. And in venture, because it's super competitive and optimistic and it grows fast, people pay a premium because of the power law.
Mhm.
That's my read on this, is that the discount seems to have always existed for venture, and it's bounced between 68 and 88. But for something like buyout, it's the range has been 87 to 97. So in a peak market like 91, people will pay up extra percentage points or give a smaller discount would be the way to say it
Yeah.
But, yeah, things might be lightly coming back. This tracks with what I'm seeing.